How can I avoid estimated tax penalties with Safe Harbor? Imagine this. You want to keep your tax payments smooth and avoid any surprise penalties at the end of the year. That's where understanding the Safe Harbor rules can really help you stay on track. When you pay enough during the year, the IRS won't charge you extra for underpayment. So, what does that mean exactly? Well, you need to meet certain payment rules to qualify. The first rule says you should pay at least 90% of your total tax liability for the current year through withholding and estimated payments. This means estimating your income, deductions, and credits as accurately as possible. The second rule is based on your previous year's taxes. You need to pay 100% of what you owed last year if your income was less than or equal to $150,000. If your income was more than that, you need to pay 110% of last year's tax. If your total tax owed after subtracting withholding and credits is less than $1,000, you usually won't face a penalty. This is a simple way to avoid extra charges if your tax bill is small. The key is to make sure your payments meet at least one of these Safe Harbor rules. To do this practically, start by reviewing your last year's tax return. Use that as a baseline for your current payments. If your income is expected to go up significantly, consider paying 110% of last year's taxes to stay safe. Make quarterly estimated payments on April 15th, June 15th, September 15th, and January 15th of the following year. Setting reminders for these deadlines can help you stay on schedule. If you prefer to adjust your withholding, you can do that through your employer. Increasing your paycheck withholding can help cover your estimated taxes. Remember, high-income taxpayers need to be especially careful. They should aim to pay either 90% of this year's expected taxes or 110% of last year's taxes, whichever is less. Using the Safe Harbor approach gives you a financial cushion. It helps you plan your cash flow better and keeps you from facing penalties that could throw off your budget. Staying on top of your estimated tax payments and understanding these rules makes tax season less stressful and more predictable. That way, you can focus on your financial goals without worrying about unexpected penalties.